Hello traders, The video is which sector should one invest in? Alright, we are recording this video today because a TSTWSYS008 trader did ask me to answer that specific question, which sector should one invest in? Alright, so when we are talking about which sector should one invest in, we are asking another question. That question is, where is the money going? All right. So in order to know which sector should you invest in, you want to know where is the money going? Which sector is the money going into? So if we know that the money is going into commodity, all right, that is the sector one should be looking for an opportunity to buy. It doesn't mean that just buy anywhere, anyhow, all right? You want to select the golden nugget in that sector, all right, so you may buy. So you want to find out where the money is going, all right? So if you want to ask, because when we are saying which sector should we invest in, it also means that which sector should we divest in, or which sector should we sell, all right? So some traders say we shouldn't be selling, you should sell and buy. So which sector should we be selling? It means that a sector where the money is coming out from. So the money went into that sector before. Now that sector is overbought in the proper sense of the word overbought, not because the stochastic is overbought, not because the RSI is overbought, but the price itself is overbought and that sector is overbought, and smart money or the professional investors start cashing out harvest time, and this is the sector that we should be selling. So if you know the sector that you should be selling, you want to know the correlation between that sector and other sectors. Right? And in this tutorial, I'll try my best, to answer that important question: which sector should you be investing in? So I know that by this time, a lot of technical traders, swing traders, day traders, are already gone because they thought that this tutorial is not for them, but it's wrong. Because if you want to swing trade, for instance, you want to know which sector you should be bullish in. So you want to be giving priority to swing trading, setup, or if you are day trading, to know which sector is likely to be bullish. So when you are day trading, you want to employ or deploy the appropriate trading strategy. But when we are talking about investing, a lot of technical traders run away, but it's a mistake because there is a hierarchy in the market. We have the long-term investor, then we have the position trader, then we have the swing trader, then we have the day trader, then we have the scalpers, the gamblers, the speculators. So every activity in the financial market is very important. So if you know what the long-term investors are doing, you as a medium-term market participant, you can make an excellent decision. Same thing if you are short-term market player and you know what the medium-term market participants are doing, you can make excellent decisions. This is it. So in the past, I thought that if you're a technical trader, you should be busy only learning about Fibonacci, RSI, CCI, overbought, oversold, and that's it. But it's not going to help, all right, if you don't ask essential question like this. This is a very, very important question. Which sector should we invest in? Before we continue, recently, this is a very important question. Recently, I started posting videos at Day Pro Traders. Now, purposely, if you notice carefully, the stock that I was analyzing are stock that are in the gold. Those are gold miners. Those are gold miners. So why did I select all the time those gold miners? Trader thought that this, George, you don't know what you are doing. But this is a sector that is likely to go up soon. This is gold miner, gold explorers. Everything to do with gold is likely to go up for a while. And there is a reason for it. So to answer the question, in order to, so you want to know where the money is going. The next thing that you want to pay attention to know which sector you should invest in, is to pay attention to what we call the market indicators. So for instance, dollar yen, currency pair, if you trade forex, is a very, very important market indicator. All right? Gold is a market indicator. Silver is a market indicator. So if you want to play with the sector and know which sector is likely to be bullish or bearish, so you may deploy the appropriate strategy, all right, in that sector, all right. You want to pay attention to the market indicators. The market indicators can help you to pinpoint, okay, the sector that is likely to be bullish and the sector that is likely to be bearish. So first thing, where is the money going? Which sector is the money going into, or which sector is the money coming out from? The second thing, you want to pay attention to the market indicators. All right, gold, silver, dollar, yen, those are market indicators. All right, very, very important. Now, I'm going to show you a clear-cut example. That's why I'm looking at the dollar yen here. We're going to compare it to gold. And this is why I've been posting video at Day Pro Traders YouTube channel, analyzing recently more of gold stock, because they are likely to be bullish, all right, for talking about medium term at least, all right. Now, the third thing that you want to pay attention to if you want to know which sector you should invest in is to pay attention to the central bank. Now, so technical traders say, why should I care about the central bank? Well, if you want to last in the financial, you see this week? So I said to traders 2 days ago that after 2-4 India wave, that the market is likely to go down, blah, blah, blah. I'll come back to that in another video because of the G7 meeting in France. Now, this is about experience that I had in the past when one day I placed a trade, all right? I think I was buying Facebook stock. For that position, it was like £700, all right? And it was when I think it was G7 or G20. And everything aligned for me, technically speaking, and I placed the trade, I was happy. And I went now to buy something, all right? Went out to buy something. By the time I come back, that position disappeared. I couldn't understand why. So a lot of technical traders want to lose money before they learn it the hard way. That's their decision. Some traders who are losing, okay, maybe they decided to get smarter, okay, adopt a different attitude. But sometimes I say to traders that the worst thing one will do is to disregard the experience. So it's like a father telling a son or a daughter something very important, and that a child or that a son or daughter is not paying attention. That's just too crazy. All right, let's go back to our topic. So the third thing is the central bank. So the central bank will make policy like we see from 2008 to 2012, the Federal Reserve was devaluing the dollar. That has a repercussion in the whole world. We see inflation all over the world, money moving out of one sector. So the bond sector, the money was coming out of the bond sector into the stock market. All right? People couldn't. So if the interest is low, the investor will not going to buy bond because it's too low. All right. So the money should go somewhere. So it's bringing it back to this. So policy that are made by central bank, not only by the central bank, by the ministers of economy. So in every country we have minister of secretary of economy. All right. And then around April they change their policy and they make a very important decision that will affect that economy. So in that country, that decision that is made by the Minister of Economy will affect some sectors. Some sector will benefit, some sector will lose. What usually happens is that what they call the budget day, as soon as the budget is released, the newspaper will analyze it, all right, especially the financial newspaper, and we see which sector is likely to benefit from it. So when we say that the money is going to one sector, as I said before, we want to know, all right, we don't just want to buy and sell anyhow. We want to find a golden market that we should buy or sell. Okay. So central bank, ministers of economies, their policy or the budget that is in place will determine the sector in that country what you invest in. But when we are talking about the central bank, talking about the Bank of Japan, the Bank of England, okay, the Bank of Australia, the Bank of the Federal Reserve, especially the Federal Reserve. The Federal Reserve decision will force other central banks around the world to follow it. Like in 2008, when the Federal Reserve was devaluing the dollar, we see that in London here, the Bank of England also started devaluing the pound. All right, this is something that so it's like a rotation. They are doing it all the time. All right, and then you see now the central bank start putting up interest rates, and now they are talking in London here that they will put up interest rate also. So this is it. The central bank decision will affect the sector. Another thing that we need to pay attention to when we are talking about which sector should we pay attention to, we can also pay. This is more technical. It's about the market cycle. All right. So that's a bigger topic. All right. I'm just going to leave it to you like that. The market cycle. I'm not going to expand on it. The market has a cycle. There are mini cycles. All right. And there are a bigger cycle. The Elliott Wave traders understand this topic more than anybody else. All right. But there are different types of cycles. And those cycles sometimes caught up with fundamental traders. Even the central bank sometimes they get into trouble with the market cycle. So they are doing their policy, they make decisions, but the market cycle itself will change everything, forcing even the central bank to change their policy. All right. So this is it. So for instance, if a central bank is devaluing a currency and then you get caught up with the market cycle, all right, he may be forced to put up interest rates very fast to adjust to the market cycle. So the market cycle, there is always market cycles. All right. So we're talking about Elliott wave, 1, 2, 3, 4, 5 waves, plus the corrective wave. That's one Elliott wave cycle. But one Elliott wave cycle become a mini cycle of another Elliott wave cycle of a higher degree. So though you may see it like this, that there is no cycle here, there is always a cycle that the market is following. It may not be visible to people. People may not know about the cycle, how the cycle will form, whether there are policies that are made. You can call it like God hands in the financial market that no central bank can control. And sometimes that's why, we see sharp correction. Like in 2008 when the market started crashing down. This is a portion of a market cycle. A mini cycle was in place. And even the central bank were not aware of it until it started happening. Otherwise, they would have taken precautionary decision. So market cycle will also help us to determine, which sector should we invest in or divest in. So at the end of the day, it will come back to the, where the money is likely to go or where the money is likely to come out from. All right. So now, as I said, so those are 4 things that will help us. Generally speaking, there are other factors, but I don't want the video to be too long, that will influence our decision when we are talking which sector should we look at. So if you ask me today, which sector is likely to be bullish? Gold sector, gold. Why? This is about the market cycle. The S&P 500, all right, is now in the 4th wave. We are expecting that 5th wave. Are we going to have a normal 5th wave? If the S&P 500 is top up, become overbought, all right? And the people who are talking about it for some time, the market can go up more. But people are getting a little bit afraid that the market may pull back. This fear, that's another question that the same trader did ask, and I like that question, greed and fear. So when people start getting afraid, they will rise to gold, and gold sector will benefit from it. So this sentiment of fear is brewing. Not only just fear, people are a little bit cautious about how far the market can go, whether it will continue or not. As people start thinking like that, they will start buying gold, and gold is likely to benefit from it. All right. So this is one sector, gold producers, gold traders, but you don't just go and buy any So this is one example there, okay? One example that you must pay attention to. The stock market has been going up since 2012. Personally speaking, the market can continue to go up, but this is not the best season. I'm choosing my word carefully. This is not the best season to buy and hold. That's my view. I may be completely wrong. Don't take my word for it. Right? Don't take my word for it. I may be completely wrong. But if you want to buy and hold, you want to know in the stock market, you want to know which sector is likely to benefit from it. All right. So from 2012, the Federal Reserve, this is a central bank, start putting up, they were telling the market first that they will put up interest rates, all right? So they were ringing the bell and say, soon we put up interest rate. That message start coming up more and more, and they start putting up interest rate. So while it was happening, all right, a lot of money that went out of United States start coming back to United States, because when the Federal Reserve was, so when we are talking about the sector, we can expand it to a country, all right? That's it, all right? So it's not only sector, we can talk about different areas of the world. So there was a time when the Federal Reserve was devaluing the dollar, money was coming, people were selling the dollar. So if you want to know, this is it. It's coming back all the time to money. If you want to know which sector should you invest in, you want to pay attention very importantly to the currency. Which currencies are likely to be bullish? Which currency are likely to be bearish? Currency that are likely to be bullish, those are the country where the money is going to. Currency that are likely to be bearish are the country where probably that economy is overbought, and the money is likely to come out very soon. So the money was going there first. Now the money is likely to come out. So it's all about the money flow that will help us to determine which sector should one invest in. All right. The last point that is very important. So this is about the selection. So now you know which sector you should invest in. All right. And now you want to buy or sell. All right. So if you go into a sector you want to buy and you want to find financial instruments that are oversold. We are not talking about stochastic oversold, CC oversold, RSI oversold. Fundamentally oversold. You perform Google ACID test, you check the book value of that financial instrument. You will find a way, fundamentally speaking, to see whether so one example will be a company that is making so much money, but their stock is not responding yet. They are in a sector that is likely to go up. So you find the sector is likely to be bullish, all right, which means the sector itself is oversold. So another criteria to determine which sector you invest in is the sector that is oversold. And which sector should you invest in? Which is the sector that is overbought. How do you know that the sector is overbought and oversold? You can use the market cycle. All right. So when we know that the sector is oversold, we want to buy in that sector. We want to find the golden nugget. Again, we want to find the oversold stocks or financial instrument in that sector that we will buy. And if we want to sell in overbought sector, we want to find financial instrument that are overbought. This is about the fundamental analysis. All right. Digging into what's going on there, the management, the money flow, the product, the future of the company. It's not about technical analysis or Fibonacci or RSI. It's more about, common sense, finding out, whether these people have a future, and most importantly, the stock is oversold. So that's why recently I'll be posting video about gold stocks, all right, because that sector is likely to benefit from it in a normal condition. I choose my word carefully, all right, in a normal condition. So you see here, so we are talking about market indicators can help us to know which sector is overbought or oversold. This is a very good example here, and I showed traders this one time before, and I'm showing it again today, all right? Bear with me, please. So you will notice here from 2000, so in fact, we don't have all the, hold on please, traders. I will be back in a minute, okay? I will be back soon.